Good morning, traders. It's 8:04 a.m. Chicago time on Wednesday, the 25th of May, 2022. I'm back in Chicago and happy for it. Can you guys hear me? Test. What is going on here? It is really not. Yeah, it's really wild. I don't know what this program does with these mic settings, but it's kind of annoying. Stream input. Hang on one second. How about now? It's a little loud. Yeah, it's overamped. Here we go. This should be better. I don't know what to tell you about this. It's really annoying to me. Anyway, this is episode number 2240. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, back in Chicago, and the setup somehow shifts every time I do a broadcast. Again, here we go. Just a mess. Let me bring this in here. Sorry, I was gone, and therefore things are a little bit wacky. You should be able to see the the sheet in front of you. Again, a little bit wacky here, but we'll get by. This morning, the risk sentiment is mild risk off to mixed, is what I'm seeing. The S&P is off 12.5 points, and the Dow Jones is down 102. Nasdaq's holding its own. It's in line with the others, down only 48 points. And we see the Euro Stoxx 50 and a German DAX holding up pretty well. Pre-market, we had Bank of Nova Scotia, Bank of Montreal, and Dick's Sporting. You had Chanel, I think, report yesterday that high-end consumer demand is still very strong. We saw the same from other brands. I think, is it Neiman Marcus or Nordstrom, that said that actually beat their expectations. After the close today, we get NVIDIA, a key player, and then the key thing to note for today is that, excuse me, the Fed meeting minutes today are not likely to represent the latest thinking from the FOMC, as the narrative has changed a little bit. So be aware of the fact that it is very, very likely that what the minutes show today is not really reflective of what the Fed's current stance is. We had Bullard come in and talk about rate hikes maybe stopping sooner and things like that. Again, high-end retail still strong. Today, this morning, we had a couple of releases. We had the German GfK consumer confidence came in at negative 26, expected at negative 25.2. And then U.S. durable goods came in at 0.4 in line. Durable goods ex transports 0.3 versus 0.7 expected, so a slight miss there. Crude oil inventories expected at 737 million barrel draw. Gasoline expecting a 634 million barrel draw. Then we have Fed's Brainerd. We'll see what they have to say, and the FOMC minutes at 2 p.m. Eastern. So today, just pay attention to the FOMC. I wouldn't read too much into what they are saying. Here's what I wrote about or what I said yesterday. This is yesterday's Trader Bite. The expectation yesterday is for a choppy open and a drop into or towards 38.55. Expected the market to battle 3900, but fall beneath it. The key target yesterday was 38.55. That's what was expected. Here's what we got. Let's go to Edge Pro X. Let me switch this. Not sure why my screens are so messed up. Here we go. So we want desktop 2. All right. Okay, so here's what we got. So I expected the market to drop into this low here. I showed it yesterday. The low it had put in was at 38.72 before it turned back up, and it closed higher than where it opened. This is another clear rejection back into the middle of the range. This chart here, take a look at what's happened here so far. So these lines right here represent the prior week. So what we're doing with these lines on this intraday chart on Edge Pro X is this chart kind of gives me a very quick overview of where we've been, where we're going, and how the auction is proceeding. The orange profiles represent the Globex session, and the blue profiles represent the RTH, or the stock connected session, or the underlying connected session. Look at where we are compared to last week. We are 2 days into the week, and we are really battling against the prior close, the prior settlement, which is around 38.99, 50, 75. That in that area, and we are dead nuts in the middle of this range. Very, very tentative market. Things are changing. Things are changing slightly. The narrative is changing overall from a macro picture. We're seeing the overall close-to-close volatility coming off a little bit. It is really high. The close-to-close volatility for the 1 sigma, the close-to-close volatility, currently, if you're a Convergent member, you know what this means. It's 83 points, 83 from close to close. Anything up to 83 points is considered to be normal or expected in terms of the close for the last 20 days. It's a measure of volatility, close-to-close volatility. That's coming off. The rotations have come off a fair amount when I did the homework on Sunday night and disseminated that to Convergent members. Things are changing slightly, and we may have seen a bottom here unless news comes out, new events that we need to price in come out. In my opinion, it is very likely that we have an intermediate term low here. So even though yesterday the expectation was for it to fall towards this 55 and it finished at 72 and it finished higher than where it opened, this is a further indication, along with this V bottom right here that was put in on Monday, or Friday was it, or Monday was it? Friday. This is an indication that there's some bottom fishing here. There's some bottom picking going on, and they're scooping up discounts. And so we are stuck in this high volume distribution between 39.50 and 38.50 with a lot of concentration in this 39.25 area right here. So we are building, if you look at the prior day, there's your point of control around the 39.25. I think 39.25 was the overnight point of control. And then today, the point of control, again, at 39.25, the exact point of control currently, yes, 39.25 again. And it looks to me like we are forming a base here. Yes, it's got a down slope, but it's also got an up slope. We're forming a base, and we have not attacked the prior week's high or low. It is very likely that this will make its way back to 40.15, like I talked about yesterday, and to start challenging the prior week's high of 40.8975. This looks like it's bottoming out to me. It seems everything that needs to be priced that we know about in terms of bad news is already priced in, and we're hearing Bullard and others kind of talk us off of a ledge when it comes to interest rates and what to expect going forward. A lot of events are already baked in, and to me, it just looks like every time we pop lower, we're trading from the outside in back towards balance here, which at the moment is around 39.25 with the cutoff at 39.50. So this is an interesting structure. If we look at the Edge Pro X TPO chart, we see that we've had this fantastic balance up here. Again, very prominent 40.15. This is the big magnet area for the swing on a swing basis, not just for today, but on a swing basis. Today's magnet's 3,900. And you can see there's a singles range here. We close the singles range, and we keep flashing back up. And so to me, this looks like any selling is likely to be bought, and it's likely to put in higher lows. So if we see any lows today, I'm expecting that to put in a higher low and to ultimately challenge the high of yesterday and turn us back up. The high of yesterday was 39.54.50 in the RTH. So we're likely to go and move towards the 40.89 and then start challenging the 4,000, in my opinion, over the next couple of days. Next couple of days, what do we have? Tomorrow we've got GDP growth, key number, GDP growth Q on Q for the second quarter of this year. The second of the first quarter estimate, we're expecting a negative 1.4. That's a key figure. Pending home sales tomorrow. We got personal spending and income on Friday as well. Nothing really crazy to account for coming into the session. So all in all, I'm seeing evidence that this is likely to bounce. Here's yesterday's RTH. This is the RTH right here. This is yesterday's RTH relative delta. If you look at the delta overall, quick drop. This was expected. I talked about this. This was in your primary scenario yesterday, that we are likely to experience a drop on the open. The relative delta drops, small lots, large lots dropping, small lots really governing the auction in terms of aggression. But overall, sideways, and it's small lots wagging the dog. And we finished weak yesterday, despite the fact that the prices finished above the open. Relatively weakish close, and then we come back in today, and this thing is totally dead. Not until 6 o'clock do we see any participation by 100 lots or better. Let's zoom in a little bit, and you can see that we are split. Large lots higher, small lots lower, very large lots sideways. So this feeds into the narrative of chop on the open. This is kind of feeding into the fact that we are opening on top of that 39.25 Again, it's currently trading exactly at 39.25. We're opening on top of the 39.25, which was yesterday's overnight point of control, today's overnight point of control. And overall, we had a market that has pulled back a fair bit. Here's what things look like currently. So this is yesterday. We open up, we dip down, we formed this beautiful box. Look at this box. We did have a neutral day yesterday. We broke the IB high and the IB low, but look at this box. This is a just fantastic future support. You can see it was tested from above. This is a nice little setup here. Poke through the mid, pull back to the top of the box, and you can see it turning back up. And a few whipsaws yesterday. This is a 1 tick by 20 PNF chart. It's my bigger-ish picture chart of the action. And we finished relatively strong on pretty negative delta. And then we open up. It doesn't really qualify as a neutral. It could technically be a neutral extreme up close, which is a reversal type setup. To the bullish side, we did complete the job by taking out yesterday's high in the overnight session, but we've been pulling back, and here we are beneath the mid VWAP, and we are on top of the overnight point of control. It's nice to get this separation because it is very likely that once we open, we would move right back into the prior settlement. Okay, so the prior settlement price is 39.40.50, and we have the mid and the full session VWAP 39.41 and a quarter. Just this, to me, this looks very, very much likely to push to the upside. We're resting here on top. Again, we're resting here on top of the overnight point of control. Yesterday's point of control is much lower, right down here at 38.85. Is it 38.85 is the point of control? So we have a nice little target down below as well. But the first thing this morning I'm expecting is for us to respond back to 39.40, and from there it is tough to tell, because if it gets back to 39.40, so we will at that point hit the prior settle stat. That'll be done. We'll still have the overnight stat outstanding. We have a multi-distribution profile, which means the auction is unsettled. It's in the discovery mode, so we're likely to kind of look around quite a bit, but I'm expecting a very contested open, and I'm looking for a responsive push up, and I'm looking to sell that 39.41 area. If I'm wrong, then I'm looking for that 39.41 area to be a base. If I'm wrong, meaning it blows through, I'm looking for it to be a base to pull back to for an attack on the overnight high. That's the primary scenario. So let's get into our scenarios. Let me just pause for a second and remind you all for the last time that today at 12 p.m. there's a futures radio show. I'm going to be on with the guys from Order Flow Labs. We'll be talking about trading indices using order flow. Please make sure that your entry for the giveaway is submitted by 11 a.m. Eastern. Once the show starts, submissions will not be considered in the giveaway. The giveaway is worth about $1,000, a little over $1,000. It includes subscription to Edge Pro X, which is what I use for executing and trading with Rhythmic. Rhythmic's user fee is covered by Edge Clear, including your Edge Pro X license. We're giving three of those away for 6 months. Rhythmic is my preferred execution feed with its MBO capabilities and so on. Go to edgeclear.com/deli to register. So let's look at what's expected for today. Let's set up the chart here Very interesting structure. A lot of stock zone levels in this area. Here we go. What is expected for today? So this morning, open auction in range, expecting responsive buying into the 41. I'm looking for the 41 to fail. I'm looking for a short back to the 39.25, and then I'm looking for it to migrate to the magnet, take out the overnight stat by pushing the 39.1350 overnight low back to 3900 and a potential dip into the prior point of control until we get the FOMC minutes, and then who knows what the market is going to do at that point. This is the primary scenario. Responsive buying, selling into responsive buying back to the overnight stat. That is the key. So risk off at that point, looking for an entry around 39.38. Be nice to get 41 or 42. 39.38. Scale off at the overnight point of control, 39.25 to secure risk, and then look for a push into 39.13, giving us 28 points for about 4.5 points of risk. With scales, the R factor on that is about 5 R or so, but really the ultimate target would be a push back into the prior point of control. There's quite a bit of support here. There's formidable support down into this area. This is why there's a stock zone there, 38.90 or so. That would be what we are looking for. So again, 41 up top, back down to the 25, the overnight point of control, and then to the 13 low. Okay, so you can see the 13 kind of plays a little bit back here. The 13, risk off at this point. Then you have your magnet at the double O with a target at 885 down below. That's the primary trade for today if it were to work out. Again, I don't expect it to hit all its targets. My risk will be off, and whatever happens, happens. The secondary scenario is an open that immediately sells, a continuation of this overnight flow to the downside. Sells off, takes out the overnight low, gets us our overnight stat, pushes into 3900, possibly pokes through, and then I expect it to go sideways until the FOMC later in the session. If we test lower and come back above 3900, we're very likely to push back to 3950 up here, which is the over-under stock zone. Am I saying a lot of stuff you don't understand? Can you give me some feedback before we go here? Am I saying a lot of things you don't understand? Does it feel like I'm speaking a bunch of gibberish and it's very cryptic? If so, let me know, and I can guide you to resources that can help explain all these acronyms and stuff like that. You need to get up to speed on what I'm talking about, because I'm talking about auction, I'm talking about support resistance planning, price action, volume profile. It all comes together, and it gives us a very strong hand in the market, in my opinion. Once I have a plan like this, all I need to do is let the market, wait to see what I need to see, when I need to see it, act, and let the market do what it's got to do. This is the best way to trade, in my opinion, in my experience, 22 years. This is the best way to trade as a discretionary trader. It's sustainable, in my opinion. Good luck, and I'll catch you at the show this morning at 12 p.m. Eastern. Don't forget to register for the giveaway. Good luck.